Well, good morning, Henry.
Good morning. Good morning.
Nice to be together again. You and I have been doing a lot of talking about, really what sets us apart in the industry as loan officers, our realtor partners that we work with. What can they expect from us? And there's just so much to talk about. So I thought maybe today would be a good day. We can kind of break some of that down. Some of our, those that will listen to our discussion today, they'll see what type of programs we offer, what we do differently to really raise the bar in the industry. And by way of a formal introduction, Henry Hernandez, longtime realtor and loan officer as well with iFinance Mortgage, and myself, John Rodriguez, iFinance Mortgage. Henry, when I first started with iFinance Mortgage and Joe, there was just a couple of us. There was actually just Joe and I in the office, and we had our processor, Christine, and we had Carter out there doing his thing. And Carter, you're a beast, dude.
Yeah.
And that's kind of where we restarted everything. Yeah. And now it's exciting. We have about 28, almost 30 on our team now from all across the nation. And, as you and I were talking about, we're multi-licensed now. We're Arizona, California, Florida, Georgia, Texas. And in addition, we can do investor loans.
And more to come.
And more to come. Yeah, we've got some other states in the works right now too. But, I thought maybe we'd just share a little bit together of, what's the difference in your opinion? If I want to get pre-approved for a loan, and of course my realtor, that's the first question they're going to ask, hey, are you pre-approved yet?
Of course.
Oh, if not, all right, go to Henry, go see John. Should I go to my bank first, or why should I go see Henry or John?
Right. A lot of times, we have this conception of, hey, the bigger the better, right?
Yeah.
Let's go to these banks that we see on TV. Let's go to Chase. Let's go to this. I don't want to name drop, but you know who they are, all the main banks. And why would I want to go with a company that's, I don't know, it seems like they came from very humble beginnings, as you mentioned earlier. Well, first of all, the only reason why we have grown so much is because of how many people we've helped. That's first and foremost. Now, to answer that question in regards to why not go to a bank versus a private broker, well, when you go to a bank, whichever bank that may be, they have their own programs, right? And that's what they're going to offer you. They're going to offer you their programs, of course. They will not offer you any other bank's programs. So if you don't fit in within that criteria,
That box
that they have, exactly, they'll be like, well, I'm sorry that we can't help you. Or these are the rates, or these are the conditions, right? So you go through all the hoops, and then they tell you, sorry, or this is the rate we can give you. And then if you think, well, I don't know, maybe I'll shop around, then you go to another bank. The process starts all over again. They run your credit again, and then they only show you their programs. And then you're left to compare this one with this one. And if you want to keep going, well, you can run your credit to the ground, But when you go to a private broker, a brokerage is someone that works with a variety of banks. And one of the things that people don't realize, or a lot of people don't know or are not aware of, is that these big banks that you see, the ones that we have our checking account in and all that, these banks, their main business is to be checking, right? Is to hold deposits. Mortgage is not their main business. In fact, there's other types of banks that only do mortgages, and these banks are huge, just as big or bigger than some of the ones that you're thinking that hold your checking account. So why not go with a bank that specializes in mortgage? Why? Because they have all of the variety of different programs to help people from all walks of life. And those are the banks that we work with. So, it makes a huge difference, just to answer your question, it makes a huge difference when you go to a broker, because then you only run your credit once. and you get an array of options, right? Not to mention that, you come to us, you give us your scenario, whether it's that you're a first-time home buyer, your funds are a little bit limited maybe your credit is like right on the verge, all of these little issues we work with. We work with people of all kinds of situations. We can help you boost your credit, maybe to give you a better rate, because that's another thing. We can say, you know what, this is where you're at right now, but if you were to just do this small little adjustment, we can get you right here. People don't tell you that.
No.
They don't bother. The banks don't bother with that. They say, no. Here you go. Like it? No. Well, too bad.
Next.
Exactly. They got plenty. They got a huge line on the door that keeps walking in. So we cater to really helping people. And we especially first-time home buyers, it's a big decision in your life. It's one of the biggest decisions. Other than getting married, this is going to be one of the biggest decisions that you make. So we understand the hesitation, the fear, the anxiety even that it brings.
Oof,
because you want to make sure that you're doing the right thing. It's your money, it's your life, your family. So we take it very personal. Just like you take it personal, we take it very personal. So, that's why when you come to us, you can just say, as if you're talking to a friend, hey, this is my situation, I've been saving a lot of money. I've been working my butt off. But man, my credit is just not there. I don't know what I'm going to do. Everybody's asking for 20% down. And that's that's more than enough, more than the money that I have. Meanwhile, the homes are getting more and more expensive. I think they're just out of reach. I will never be a homeowner. Well, let me tell you, even in today's market, which they are very expensive, there's a lot of people buying. Because regardless of how you spend it, being a homeowner will always outweigh and beat being a renter in any time frame. You ask people from 10 years ago, and then they were telling you, oh, we didn't buy 10 years ago because we thought it was way too expensive.
We wait it out.
And look at it now, right? Look, and it's just going to keep going and keep going. Yeah. It's just going to keep going. And the funny thing is that as houses get more expensive, guess what? The rents are getting more expensive. So when you really do the math, you really did a number on yourself by not maybe taking that chance a couple years back.
It's the cost of waiting. What was the cost of waiting?
Exactly.
When I could have owned, and here's the owner of that property that you're renting, their mortgage payment is fixed.
Yep.
But your payment is going this way. Mm-hmm. So who do you think's making out on that deal?
Oh yeah, you're buying their house.
You're paying their mortgage for them.
You're paying their mortgage, and a lot of them are making money. They've invested, and they were smart, and now a lot of times your rent not only covers the mortgage, they even pocket some money there as their house keeps also growing. Because that's another thing, that when you buy a house, it's almost as if you're taking money out of one pocket and putting it in the other. Because what you're doing is you're making a payment on an asset that you own, but you see that asset, it doesn't go down in value like a car or any other thing that you own, like a pair of jeans or whatever. This is an asset that actually goes up, right? So as you're making the payment buying it, your money is actually growing. And that's a factor that a lot of people forget to factor in, because a house appreciates right around 6% or so a year. And in some areas like California, even more, even way quicker than that.
So true.
I mean, people have built $100,000 in equity in a year, literally here, in no time, and they get shocked when they see that. Because then when you do the math, a lot of times they said, well, wait a minute, when I do the math, not only did my rent, my payment was free, or living here was free, but now my money grew, right? Because even if you were paying, let's say you're renting for, I don't know, $2,000 or $2,500 a month, and now your payment is going to be, let's say, $4,000 of buying a house, you're thinking, well, gee whiz, I'm going to have to come up with $1,500 extra. Right. But what you're doing is you're taking that $4,000 out of this pocket, you're putting it over here. Why? Because anytime you need that money back, guess what? It's right there in the equity.
Yep.
You can refinance and cash out. You can sell the house, but your money is there. Regardless of how you look at it, your money is there. Think of it as a bank account that
And
you're
it's
putting
growing.
it in.
Yeah.
And it's growing. I mean, do your research. How much will the bank pay you if you deposit your money in savings?
Oh,
You think you're going to get 6% a year?
no
on that?
way.
Nothing. So by actually buying a house and actually putting your money in a house, not only is your money growing, but you're taking care of a big thing that you need. It's a place to live.
Yeah,
You're killing two birds with one stone here.
That's so true. And, you mentioned about a bank. Don't get me wrong. Banks serve the purpose. They do a good job with things. But using a broker, one of the first things I tell people when I'm speaking to a potential new home buyer and they're trying to get pre-approved is I tell them, I says, you know what? I don't work bankers' hours. I work your hours. Because typically banks, you go into the bank, you talk to people when they're open, whether it's 9 to 5 or, maybe even a half day on a Saturday if you're lucky that bank's open.
Right.
But with us, if you need somebody at 2 o'clock on a Saturday afternoon because you're looking to go check out some properties, your realtor needs to get a hold of us, they want to change maybe your pre-approval letter, make sure we do those things. We're reachable. After hours, after 5 p.m., you need to get a hold of us. So that's another difference is availability. Why would you use and stay within a box when you really need something important? And so does your realtor. They need an answer now. Oh, you're going to have to wait till Monday. We close it Friday. So availability is also a very large reason why people come to brokers like us. And then it's choosing the right broker, because some brokers, even though they may be available, they don't answer their phone,
Right.
or they don't answer their text or their emails. But the beautiful thing about iFinance Mortgage and all of our loan officers here is we're accessible, and we pride ourselves on getting back quickly. And in this day and age, it could be the difference between you losing that house,
100%.
losing the offer, and getting it and winning it. So
100%. We get so many compliments on that.
Oh, we do.
Our communication channels are always open. And we even have several different people that help in. It's not just one. So, yeah, people love it. Honestly, that's one of been the biggest compliment and one of the main reasons why we've scaled and actually grown is because everybody that's worked with us, whether it be your agent, your real estate agent, or even the borrower themselves, they're like, one of the nicest thing about you guys that I really appreciate, you answered the phone.
Yeah.
Even if things were a little shaky because of new condition or something, you still answered the phone. Ask your realtor, if you don't understand what we're talking about, ask your realtor, what is the biggest frustration when you're working with a lender? What is the number one thing that you just despise and you hate? And they're going to tell you, they don't answer my calls.
Yep.
So,
Or give updates. Like you said, transparency is important. And sometimes, we have some challenging news that we have to share from underwriting, from, the lender investor. And there, like you said, there's new conditions that come out. It's like, oh man, we're supposed to close, Well, we have to share that information. But more importantly, we don't just share bad news or share untimely news. We share a solution with it. So we're solutionists. We come up and say, okay, here's a challenge. What do we need to overcome that challenge? Do we have to go through it, around it, above it, around it, whatever it is, we come up with solutions.
sometimes it's a small thing. Sometimes it's like, you know what? Your credit was great when we ran it, but then the bank checked it again just one last time because they do that. But something happened. You probably went out and got a credit card. Who knows, right? And then
You purchased a
and then
car,
it dipped,
what?
And then it dipped, right? So we're here to help you work through that, And so, sometimes something does come up, and we want to help you with it. We want to get be the solution to that little issue to get the loan funded. Because if you don't get the loan funded, well, then what are we here for, right? This is our job. Our job is we fund loans. It's extremely rare that we start something and then more than halfway through it comes to a halt. We always fund them. We always make sure that we fund them because the system that we have, not only do we already know, we have the relationships that we have with the banks are unmatched. Okay, I mean,
Absolutely.
Our main bank that we work with, I mean, they even fly us out multiple times a year, paid for just to get training to go into their facility and be with them. And why would a bank be doing that to a small broker shop? No, the only reason they're doing that is because they know how valuable and how good we are and how many loans we fund, right? So, and speaking about funding, if you were to ask your realtor, I'm going to give you guys some homework now. If you guys were to ask your realtor, what is the typical time frame that these loans will take? And you probably already asked them that, and they told you, "Oh, don't worry. When we open escrow, it's going to take at least a month or so. Maybe 45 days or right around a month. They usually have it around that time frame. When they write the offers, you're going to notice that they put down 60-day close, right? Well, our average, John, what's our average closing time on loans?
Yeah, so typically like conventional things like that, it could be anywhere from 14 to 17 days after loan approval, like that quick. Sometimes if it's a little more complicated, it could be FHA with maybe lower credit scores. We got to mitigate a few circumstances in between that. It could be upwards of 20, 25 days, but typically we're closing that stuff at least within 30 days. And what, to your point, the value to that, and when you're a realtor, you're out there trying to win that offer for your client.
Right.
And there's a ton of other offers potentially, but one of the things that the seller and the seller's agent look at is how fast can you close? Because maybe there's a circumstance for that seller that's got to get out of that place because they're buying a new one.
Yeah.
So timing is everything and so important. So to your question there, we can close super quickly. But one thing that helps us do that, Henry, is we do a lot of upfront work with the borrower. We get a lot of information up front, and because on the back end, what we don't want is a laundry list of conditions from underwriting. We want that list to be just standard and very, very few. Maybe a few updated pay stubs, a bank statement or so through the process. And what some lenders do, and even some of my good friends that are lenders, is they just get the file quickly, just get it into underwriting and then wait for that long list and then come back to the borrower and just barrage them with, okay, we need this now. And it's just overwhelming.
Yeah.
So we can close very quickly and efficiently, and that's our goal.
Exactly. And because we already know everything up front, for the most part, if you're just a very, I don't want to call it generic, but just a normal qualification that everything's just within the lines, nothing special about it, you got decent credit, everything just looks very normal and cookie cutter, if you will, those loans, we're typically closing them in 2 weeks.
Oh, yeah.
Easy. Those loans. He's talking, the ones that take, up to a month or so, it's because, we have to work with credit a little bit here and there, which is fine. But my point is the reason we close them so quickly is because we're so good, honestly. We're really good at what we do. Yeah. And the relationship that we have with the banks. Because that's another thing. The banks, they got a whole, pipeline of loans as well. How is it that ours always gets thrown on the top and gets funded quickly? Well, because they're so clean and so ready that they get funded.
Yeah, you think about that, whose file would you rather touch first? One that just looks like a sloppy mess and it's like, oh, or a file that gets handed to you, I'm thinking from an underwriter's perspective, gets handed to you and this thing is clean. I mean, look at this. It's
check,
boom, boom,
check.
boom. Let's take this one, knock it out. Why? It makes you feel good to not only knock it out, but you can keep things moving. Mm-hmm. And then go back to the one that's like, ugh. So when you work with us, you get this one, the clean file.
Yeah.
Everybody
and they already know that. When they see an iFinance submission, they go to that. They go to that quickly. They have their whole list. They're like, let me just knock this out real quick. Boom, 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 boom. Trust me, our loans, we've closed them in under 2 weeks, some of them. And even the realtors are, whoa, hold on. They're not ready to, this is.
Yeah, the seller's not ready to close yet. Well, hey, we are.
And the funny part is that if there was a first time working with us, let's say a realtor, they didn't believe us at the beginning. We're like, we can close these. We see your file. We see your client. We can close them in like 2 weeks. They're like, I don't know. Let me ask for a month. They don't believe us because normally these files typically,
that's right.
And you can ask them, it takes from 30 days to even up to 60 days. So they don't believe it. When we get it done, then they're just like kind of pedaling backwards trying to. But anyway, it's a good problem to have.
It is.
It's just a good problem. I mean, at the end of the day, you want to make sure that your deposit is safe as well, right? Because remember, when you open escrow, you're putting your money on the line, and you're saying, this is my guarantee that I'm going to close. You think you're going to want to be waiting until the very last minutes, last days to fund that? No,
you put a lot of trust in us to help close that loan quickly.
Right, that's thousands of dollars you put on the line. So we're on your team when it comes to that. So these are a lot of little things to look at when you guys, when you're working with a lender, because it makes a really big difference. Your risk factor goes way down. And we have a lot of people that would vouch for that, the way we've worked and everything. And the programs that we have a huge selection of programs. We have down payment assistance, right? Can you elaborate a little bit, just in a nutshell, how that works?
Absolutely. We work with some really good investors and banks that have really niche products for down payment assistance. We have some that will allow up to even 5% down payment assistance. 3.5% of that is towards your actual down payment. The other 1.5% can be used towards your closing costs, things like that. And some of these programs are even forgivable. You make a certain amount of payments on time with no hiccups, they'll forgive that whole amount they gave you. I mean, that's unheard of. It's like free money.
Insane.
Why wouldn't you do it? But there is a responsibility that comes with it to make sure that you keep your payments on time. Now, there's other down payment assistance programs that are not forgivable, but so you'll have your first mortgage, your principal and interest payment and all of that, and then your down payment assistance would come in the form of a second loan, but it's silent. It doesn't speak to a payment every single month. So there's no payment, there's no surprises. The time when you would pay that back, though, that, let's say, 3.5% that the lender gave to you as a silent second, is if you were to refinance that property in the future or perhaps sell it, then those monies would come due. But then the equity in the home sale would, more than likely, it covers that. So down payment assistance can be really, really helpful. And we can do that in all the states that we're licensed in with not a problem.
Yeah, and I mean, that's a game changer, guys. If you really think about it, the number one reason why people think that they can't afford a house, more than even their credit, is how much money they need to put down.
Yep.
Because let's face it, let's say you're here in Southern California. I mean, typical houses go for about, $500,000? I mean, and I'm talking condos even, right? I mean, even a lot more, right? So when you think of 3.5% down, it adds up. Not to mention that then you have closing costs. But I don't know if you heard him correct. If you really heard what he said, 3.5% down is actually not only what's covered, but on a lot of these, they'll get you an additional 1.5 for the closing costs. And you do not have to make a payment on that piece. You don't have to make a payment on that piece until there's a movement in the future. It could be 2, 3, 4, 5 years, whenever you decide to refinance. By then, you have built so much equity that would be a breeze to pay. It's almost, you can look at it as if you have a good friend that says, here, I'll lend you the money. Don't worry about paying me. Pay me later whenever you sell the house. Really? Yeah, just pay me later. Here. I mean, guys, you can literally, if you really think about it, it's almost like you're buying a house with 0% down.
I got to tell you a story on that. So one of my clients in Texas actually took advantage of the down payment assistance program. It was forgivable. All right. So after his seventh or sixth payment, boom, that debt's gone. He doesn't even have that anymore. And at the closing table, because of all the seller concessions or seller credits that our realtor partner was able to get, it not only covered all of his closing costs like title, escrow, our lender fees, things like that, the setup of escrow account for your taxes and insurance, like all of that stuff. He actually got his keys and got all of his earnest deposit monies back, which was another $4,500. So he walked into this new house with no money down. In fact, he got $4,500 back in a check at closing.
That's amazing.
That's incredible.
You can't even rent an apartment and do that.
No.
for a house.
So there's programs like that. Now that's a really good scenario. Not going to say that that's always going to be the case, but the fact of the matter is, ask your lender about down payment assistance. We take care of those things. We also take care of localized and state programs too. If you're in California, there's CalHAFA. There's so many different programs that we can also work with as well. And I switched to, so obviously we do conventional, we do FHA, we take care of the veterans with VA loans, USDA. Let's say you live out in the countryside. There's programs for that too. No down payment is required for USDA, similar to VA. Those are governmental loans. I-10 loans, we take care of those. We also take care of our investors. And this is exciting to me, Henry, because we're not just limited to the 5 states that I mentioned that we're licensed in, Arizona, California, Florida, Georgia, Texas. But let's say you want to buy a property in Tennessee and add that to your investment portfolio, rent it out, get some monies for that. We can help you with that. Mm-hmm. We have investor programs that are so good that we don't require your tax returns. We don't need your income documents, none of that. We simply use the property appraisal and the report that comes back of what the current market value is for rents.
That's amazing.
We use that to qualify you for your income.
So basically, the rental income, your future rental income,
right.
They consider it as if you have income.
Yep.
And they take that, and that's used to qualify. I mean, think about how powerful that is. So rather than being a regular loan that says, well, let me see how much money you make. No, you can't afford this.
Yeah.
You already got a house payment. How can you afford this apartment complex or this fourplex or whatever you're buying? Basically, what he's saying, these are called DSCR loans, right?
DSCR.
Basically, in the qualification of income, not only will they take yours, but then they'll say, well, wait a minute. You're going to make money here in this deal. This is a running business. And they take that income, factor it in, and it now pumps up your income. And before you know it, it literally, because when you do the math in all of these, a lot of these states, they cash flow, which means that you collect more rent than what your payment is going to be. So the bank, they're not dumb. They know this. They know that this is an easy deal for them because the rental income that you're going to be receiving is going to pay that mortgage. All they want to know is, are you a good person? How's your credit? What kind of a person are you? Can you handle this? And if you're up to the challenge and you want to create a portfolio of real estate, for yourself, for your family, to leave as a legacy, we'll help you build it. And like he said, there's a lot of these, because you don't have to, buy here in California, where you can buy anywhere in all these other states that are cash flowing.
That's right.
And we can get you that loan. We can get you the property. So if any of these things, are something that interests you in regards to that, hit us up. We're not only here for first-time home buyers. We love them. We cater to them. Because we know that you need a little hand-holding. You might be a little scared. But these programs, like the down payment assistance programs, I mean, guys, this is insanely easy. Yeah. It's...
They're giving away monies.
Right.
To get you into your property. Why wouldn't you take advantage of that? And that's why we stay up to date with, the programs, the requirements, all of that, because we want to help you.
Exactly.
You make good money. Let's say you have a good job, but like Henry said, you just don't have enough saved. Well, that myth of needing 20% down payment, that's even
gone.
people that have more than enough cash.
They know
Sometimes
that they
it's
don't
not
need
even sometimes it's not even the right thing to do, put 20% down. So we give them options. Here's what it would look like if you put 10% down, maybe 15% down. And as long as that payment is affordable, why use all that other money? Why not invest that other money into maybe buying another property, or put it into some high yield account? So we don't just do the standard cookie cutter, like you mentioned. We give options to see what's best for that family.
Exactly.
So
we have a variety of loans. We also work with self-employed, through bank statement loans. So basically what that means is that, we know, you're self-employed. Your taxes don't always reflect the income quite the way it normally would.
because you're going to write things off like you should.
Right. Exactly.
you don't want to pay as
so the banks we work with, they know that. They know that's not a true reflection of income. So the standard that's always been the standard for many, many years is tax returns, right? But on a self-employed person, that's a double standard, because and it's funny because these are people that are probably making good money, right?
Yeah.
They're self-employed. Yet on paper, the bank will say no. So we have a relationship with banks that specialize in actually that particular scenario. And we can get you qualified just with your bank statement alone. Who cares about your taxes? Who cares if you haven't filed them? If your income is showing and it's in the bank, we can work with it. And if it's not, we even have other solutions, right?
Profit and loss statements.
Yeah, exactly.
I mean, there's so many programs to help our self-employed borrowers today that are outside of the box. You walk into a bank, they're not going to offer you those programs.
No.
Those are considered non-QM, non-qualified mortgage loans. We do all of that in addition to the qualified, the normal, conventional.
Exactly, your
like
cookie
that.
cutter stuff. Exactly. And a funny thing is that sometimes when I talk to people and say, well, what about this? Maybe you qualify for this. They're like, what? You mean I can probably qualify for down payment assistance? Because, down payment assistance is not necessarily for low income.
Yeah,
There's certain plans that are low income, and they'll actually say, low income, right, for specific cities like LA and all that. But the other piece, you don't have to have low income. So if you want to know if you qualify, it's just about asking. A lot of times people, they ask their realtor, hey, what do you I'm a first time buyer. What can you do for me? Can you help me with a down payment assistance? And then, a lot of times I hear that the realtor says, no, those things are no good, man. Don't get that loan. That loan's no good. Listen, it's not that the loan isn't any good. He doesn't know about that loan. So he doesn't push it because he's afraid. He's afraid that loan might be too complicated and it's going to tie things up and it's going to take longer.
Yeah, it's going to delay the process.
Right. And I'll be honest and transparent. It is more complicated, but you know what? That's what we do. We're here to help you. I mean, I think that you wouldn't mind if we need to push 20 more papers, but to save you $20,000.
Yeah.
I mean, it's worth it. It's worth it. So if your agent has said, oh, those loans are no good, that's not going to help us, double check that.
Yeah.
Double check. Talk to us.
That's why they work with us, because that's out of their lane. They don't want to talk about that stuff. Now, Henry and I, one thing we do, and we're going to talk about this in another episode, addressing specifically how we help our realtors grow their business. But I'll give you a little sneak peek. One of the things that we do with our realtor partners is we educate them. We push information forward so that they can feel more confident in telling people that, yes, there are programs that can help you, And then what they do is they bring them to us. And we might all do a conference call together so that the realtor can hear and be educated. But legally, when it comes to talking interest rates and APRs and things like that, that's what our license allows, not the realtor. So it's one of those things that we push information forward. because we want them to be confident,
Right.
so you can be confident. But at the end of the day, like Henry said, you're coming to us. We're going to help you. We're going to help set your mind at ease. And we have a good time doing it.
And we love working with, all walks of life. It doesn't matter if you're low income, you need down payment assistance. If you don't have a social and you need an I-10 loans, guys, it doesn't matter. Don't be afraid. Don't be afraid of the prices. If you think that the economy is going to go down, if you think that it's going to go side, it doesn't matter. Look at history. Houses always go up, period. Even if it's going like this, ultimately, it just keeps going up and up. So when's a good time to buy? Now.
I love
That's
that
always going to
question.
be the question. That's a question
We
that people
get
ask
asked
us.
that every single day. When's a good time to buy?
It's always now.
Our response is when you're ready.
Yeah.
When you are financially ready to go, now's the time to buy. It is. Because here's the thing. When rates drop further, and they will, rates will drop, and then sometimes they go back up, and then they drop. But what happens, Henry, when there's an announcement of a rate drop? What happens to those people that are been sitting on the sideline?
They refinance.
They refinance, or they jump back into the market. They go talk to their realtors and they say, I want to buy now. Well, let's say you're pre-approved for a $500,000 purchase. You're ready to put your offer in. Woo, the interest rates just dropped even a quarter of a point. Now all these people on the sideline who have been waiting, they start putting in their offers and they say, you know what? We're going to go 515. We'll offer 530. Do I hear 545? Do I hear 600? Over asking. What just happened to your purchasing power? It just went
down.
this way.
Because you wanted to wait.
You waited for the rates to drop.
until the rates dropped.
So now's the time to buy.
And that's a very good point, because whenever the rates drop, it creates the market to go up. So the amount of money that you would quote unquote save on the rate drop, or 0.25% or 0.1% does not match how much more you're paying for that property. You understand what I'm saying? So you wait until the rate drops to then make a move. You make the move on a good rate, but by then, now the property's up here.
Yeah. Now you're paying $550 for it if you really
that
want
happens.
it.
I mean, that happens to clients. Sometimes I have clients that work with a year or so because, the issues, and then they need a break and whatever, that they're shopping for a house. And they're like, I can't believe how much they've gone up. Yeah. But hey, guess what? The rates are 0.1% lower. It doesn't add up, guys. That's why when he's saying the time is now. There's never going to be, if the rates drop, well, the rates drop. Go ahead and go in. The market goes
You can
up.
always refinance it if they drop.
And that's another thing, exactly. If you think, well, what if they drop? What if they drop? Well, yeah, they probably will. Maybe they will. Hopefully they will. But you know what you can do? You can refinance and now take advantage of that lower one. And then you locked in the price of the house when it was low, and now you lock in the price of the interest rate when it's low. Low and low, that's what you want.
Thing.
So guys, ultimately, in a nutshell, if you're thinking about buying, whether it's your first home and you have special circumstances like we mentioned, just give us a call. Listen, it's free consultation.
Absolutely.
It doesn't cost anything to talk to us. Get those doubts out of the way. Or at least get those doubts out of the way. Even if you don't have the money, educate yourself. What do I need? What do I need to get ready, to get my ducks in a row? Just give us a call, guys. It's free.
Fear is one of the number one things that keeps people from getting into the buying process. We're here to take that fear away, educate you so you have confidence. So when you're ready to buy, you're ready to go. You know the process. You understand. You have a great team to help you, hold your hand. We got you. iFinance Mortgage is ready for all of your home buying needs. We're here for you.
100%. So regardless of what your situation is, call us. We can answer all your questions. Don't worry about if you think it's a dumb question.
There's no dumb question.
Even if you don't understand how an escrow works or what is an escrow, just call us. Don't worry about it. We will show you the what you need to get into a house. Okay.
All this house stuff, Henry, this made me hungry.
Yeah.
Let's go get some
Same
food.
here. I'm with you. All right, let's do it.
Let's go.
Call us, iFinance Mortgage.